So at the back end of 2024, I decided to liquidate all my stocks and shares. In many ways it felt like a bit of a blow, because since this YouTube channel started about 5 years ago, I've been slowly building up to this idea that it would have £100,000 in the bank. And it was going pretty well, but something just wasn't sitting quite right with me. So the short story is that I took my investments in Trading 212 and in InvestEngine, and I just cleared a mortgage. As simple as that. And there's loads of debate online about whether or not you should be investing more for the long term, or you should be getting rid of all your debts first. And all the spreadsheets will probably tell you that if you invest your money over a long period of time, then that's probably going to work out better for you in pure money terms than paying off mortgage early. But that's never the whole story, is it? For now, the short story is that I'm starting from zero in 2025. Actually, it's not quite true. I did keep one stock, and that was Palantir. I just couldn't bring myself to sell it. It's been a fun ride, and I'm interested still to see where it goes. But look, at the start of 2025, there is an opportunity here just to start afresh. All that debt is off the table now, and that's gone. And the money that I would have been servicing that debt with is now going to go towards investment. So it's actually pretty exciting to think about how much money I'm now going to be able to push towards those investments. So today I'm making a fresh start video of how I'm going to build my portfolio with InvestEngine and get moving again in 2025. I was a pretty early adopter of InvestEngine about 3 or 4 years ago now, and it's interesting to see all the traffic coming from Vanguard, who bumped up their fees for small investors and left a bit of a sour taste in the mouth. So InvestEngine, when you want to build your own portfolio, is completely free of any platform fees. There are, of course, ETF fees to be paid, but you're going to pay those whatever platform you use. So today, building out a new portfolio with ETFs only on a platform that I genuinely believe has the best interests of long-term investors at heart. So there's no point messing about anymore. Let's just get straight into it. Alright, we are in InvestEngine and we are ready to get started with a new portfolio. Just to let you know, there are links in the description below. And until the end of January 2025, if you want to open an account with InvestEngine, they are doubling their sign-up bonus. So you're going to get some kind of bonus between £20 and £100 when you invest at least £100 for 12 months or more, which isn't a bad start for any portfolio at all. Just remember that when investing, your capital is at risk and other terms and conditions may apply. Here we have the remnants of my previous portfolios that were all cashed out to pay off that mortgage. So we are starting fresh, brand new portfolio, and obviously InvestEngine offer various different kinds of portfolios. They're offering ISAs, personal pensions, and general investing. We are, of course, looking at an ISA today. Within this ISA setup then, there are different flavors of ISAs as well. There's a do-it-yourself, which is what we're going to look at today. There's the life plan portfolios, which I'm going to do a little bit of a video on in the future. So if you're not subscribed and you're interested in that, make sure you are subscribed so you hear when that one comes out. And there's the managed option as well. This is where InvestEngine put to you a few different questions, find out kind of what kind of investor you are, what kind of appetite you have for risk, and then they come up with some kind of portfolio suggestion for you. There is another video on the channel. I will link that somewhere around here. You can check that out if you're interested after this one. Today we are building our own ETF portfolio. InvestEngine, of course, deal entirely with ETFs. You can't buy single stocks here. What an ETF is essentially a collection of stocks. It's a basket of stocks. So rather than trying to pick and choose individual winners, what you're basically doing is investing in a whole lot of different stocks and shares in one asset, the ETF. So within this ETF, all those stocks are going to be grouped together in some way. It might be by geography, like the S&P 500 is the top 500 or so companies in the USA. It might be a thematic ETF, in which case maybe everything is to do with artificial intelligence in that stock, or electric vehicles, or some kind of industry. It might all be bunched together like that. So that's an ETF. It's an easy way to buy a diverse range of stocks. So the first thing I'm interested in adding to this portfolio is the S&P 500. So I just type in 500 there in the wee search bar and scroll down. I'm interested in the one that Vanguard offers, just without the fees. I don't want to pay platform fees, but I do like Vanguard's products. So you don't have to pay Vanguard's platform fees when you're investing with InvestEngine. There are no platform fees at all when you build your own DIY portfolio, just the costs of the ETFs themselves, which you'll incur whatever platform you use. So you can see there's two different flavors here of the Vanguard S&P 500. There's one that is accumulating and there is one with a yield. Basically what that means is the one that is accumulating just takes your dividends and anything you would have got from those stocks inside that ETF and reinvests them automatically for you. It's a very easy life for a long-term investor. If you want to take some of those dividends out, then the one with the yield might be better for you, because those dividends will be paid out each time rather than automatically invested for you. Really, they're very similar. It just depends what kind of investing you're after. So let's click into this ETF, see exactly what is going on. You can see there is a TER of 0.07%. That's basically the expense ratio of this ETF. This is how much it costs. And 0.07% is very low. That's 70p for every £1,000 you have invested. It makes it a very cheap way to invest in a lot of stocks at the same time. And then InvestEngine also offer a lot of nice information about what's in this ETF. It tells you what companies are in there and what kind of percentages there are. So Apple here, for example, is 7%, Nvidia is close to 7%, Microsoft, Amazon, Meta, and so on down all through all 502 companies that are in that single ETF. You can have a look at the regions and you can see that it is 94% based in America, with a little bit around the rest of the world. And the sectors, industrial, technology, financial, you can see where the spread is of your stock. So if you're interested in diversifying across a particular region, industry, or particular companies, you can have a look at this information. But that's good for me. So I'm going to add VUAG to my portfolio, and that is our first holding in this new portfolio. I really like this one because we've got access to a lot of good companies and it's very, very cheap. If you're interested in how fees affect the long-term life of your portfolio, then I have a video for that as well. Make sure you check that one out too. Next up is something from the UK. So again, I'm going to reach for Vanguard's implementations here of the FTSE 100. These are the top 100 or so companies here in the UK. Historically, they have not been as explosive as some of the companies in the S&P 500, but in terms of diversification, I'm going to add a little bit of the Vanguard FTSE 100. Again, I'm going to reach for the accumulating version. We'll take a quick look at that. The expense ratio here is 0.09%. Again, that's very, very low. That is 90p per £1,000 invested, which is pretty good. The main holdings are AstraZeneca, Shell, HSBC, Unilever, and so on, all down the 102 companies that feature here. So we're going to add that one to the portfolio as well. Next up is something a little bit different, and it's going to be the Xtrackers MSCI World Value. It's slightly more expensive at 0.25%, but it's an ETF that invests in companies considered undervalued, meaning their stock prices are low compared to their overall financial health and potential for growth. Value stocks, if you like. Okay, so things like that are Cisco, International Business Machines, Qualcomm, AT&T, Intel, groups like that. So this one is a little bit more speculative, but I think there's room in the portfolio for a little bit of speculation, so I'll add this one as well. And finally, I think it's going to be another big year for artificial intelligence, and so I'm looking at this Wisdom Tree Artificial Intelligence ETF. It's a little bit more pricey than I would like at 0.4%, but again, I think there is room for some speculation here. So there's only 51 companies. It is not a massively diversified ETF, but it does focus entirely on companies involved in the development and application of artificial intelligence companies. So if you think that AI is going to have a good year, then perhaps this might be a good ETF to invest in. I'm going to allocate a small amount of my portfolio to this ETF. So that's us for now. Those are the 4 ETFs I'm going to have. You can change these at any time throughout the year. There's nothing set in stone. Very easy to buy and sell ETFs if that's what you're into, but I'm going to go with this for the beginning here of 2025. Once you've decided the ETFs that you want, then InvestEngine are going to want to know what kind of weight you want to put behind. So say you've got £100 to invest, how much of that £100 is going to go in the S&P 500, FTSE 100, Xtrackers, and the Wisdom Tree Artificial Intelligence ETFs. So the majority of my investing is going to be with the S&P 500. So let's move that up to 65%. Next, the FTSE 100 is going to be 15%, and we're going to have 10% each in the artificial intelligence and in the world value ETFs. So let's have a wee look at that. When you finally smash all your ETFs together, then InvestEngine will give you an overall picture of what your ETFs mean now. So 72% of my portfolio is invested in America, the biggest economy in the world, and that is maybe not as diverse as some people would like. I'm okay with it for now. UK is down to 15%, Europe, excluding the UK, is 5.6%, Japan, and so on down the order. The sector is industrials, technologies, financials, consumers, healthcare, mining. It's not a bad spread, that, in my opinion. And the holdings, well, Nvidia are big, Apple are big, Microsoft are big, Amazon are big. That's probably to do with the overlap between the S&P 500 and with the AI ETF that I chose. Choosing your ETFs, set your portfolio weights. Now we just need to add some cash. So just as we look at the summary screen here, please remember I am not a financial advisor. This is not financial advice. When you invest, your capital is at risk. Please go in with your eyes open and understand that the value of stocks can go up and they can come down as well. If you have any qualms about what's going on or you're not sure what you want to invest in, just go speak to a professional. They'll keep you right. As we look at this summary screen then, I can see that this portfolio is going to cost me 0.12%, which is an awful lot better than Vanguard was going to charge me as a small investor. So I'm off to invest some money. Once again, if you're thinking about getting started with InvestEngine, there are links below in the description. Thanks for watching, and I'll see you in the next one. I love fractional shares. Like it?